Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Wednesday, March 15th, 2017. And here are some of today's trends in the news. On the market front, over there in Asia, kind of mixed. Europe up, US way up. Oil up, gold up. Today was the big day. Everybody was waiting. It was Fed speak. And today, for a change, the Fed did not speak.
Warning, bullshit alert.
Nope, no bullshit alert today. They came straight out. That's right, raised interest rates, just as everybody had anticipated. 25 basis points, that's all, not a big rise, so let's figure this out. 11 years, they raised rates 3 times, 25 basis points each. Not a lot. Actually, the real rate, when you put in inflation in there, it's still way down there, about 0. So, on that news, gold went up. I would have thought gold would have gone down. But no, the markets are not expecting much activity from the Fed. And the reason why is the Fed's forecasts for economic growth are just as bad as they are now and have been. So they're not looking for a lot of GDP growth. And they're looking like after 2019 to get it back up to around 3%. That's the Fed rate. So now you're just near 1%. So it's not going to cost a lot for car loans, for home mortgages. Yeah, the mortgage rate's going to go up. Refinancing's already happening. So on that news today, the Dow closed up triple digits, over 100 points. NASDAQ hit a fresh intraday high and closed at a record. So people were expecting a lot more hawkish statement from the Fed. It didn't happen. It's a slowdown. There's not a lot of activity, and yet the markets are still positive for both the Dow, the equities, and gold. So in economic news, consumer prices rose 0.1% in February for a 2.7% increase over the past 12 months, the biggest year-on-year gain since March 2012. Retail sales, this isn't good. They posted just a 0.1% rise last month, but were upwardly revised last month to 0.8%. And the Empire State Manufacturing Index closed lower, but new order index climbed 8 points, its highest level since 2009. And home builder sentiment hit 71 in March, its highest in 12 years. So you can see the data is mixed, but more on the positive side, and that's why the markets keep going up. Will there be a correction? Yes, there will be. We don't see a crash. And oil prices went up on the news of, let's see, yesterday, oil sinks as doubts arise on Saudi cuts. U.S. crude is down 10% in past 5 sessions as investors question production numbers. But today, the Saudis said,
That was bullshit.
well, I didn't say it yet, but you know what it is. The Saudis said they're going to be holding back production. Now remember, Riyadh makes rare pledge on output cuts as falling oil price stokes concern. Riyadh, the Saudis, said back in 2014, when oil prices started going down, that they were going to pump more. They were going to pump more, and they were going to put all those high-cost pumpers out of business, and that would bring the prices back up, and they were wrong. So why believe them now? They're desperate. So oil prices also went up because the dollar weakened a bit today. So countries that have to buy oil, petrodollars, thanks to the deal that Kissinger did in putting oil and dollars together, they have to pay less money as the dollar goes down. As the dollar goes up, the commodities are based in dollars, they have to pay more. So there was also, you've heard these stories before. Data from the U.S. Energy Information Administration showed U.S. crude stocks fell last week, and that's what brought the prices down. Now remember, they fell last week, but they've been up 9 consecutive weeks. So there's a glut of oil, and if you don't believe me, there's a glut not only of oil, natural gas glut deepens. Front page of today's Wall Street Journal. Hey, remember that peak oil? I know gas isn't oil, but it's the same family, because if you go beyond the oil, then we could go over here and take a look to Alaska. And what did they just come out with? They just found massive oil discovery in Alaska, its biggest onshore find in 30 years. There's a glut of product, there's too much demand, not enough supply. And again, when you put the whole picture together, you read a story like this, natural gas glut deepens, and one of these research groups said that the oversupply may weigh on the market for years. Natural gas futures have fallen 25% over the past 2.5 months. Then you read another story because you keep putting the whole thing together in a globalnomic package. And what do you have? Alternative energies that are going to keep sapping more and more and more away from oil, from gas, from coal. Check this one out. Sales get a second wind. More than a century after shifting away from wind power, the shipping industry is looking at ways to harness ocean breezes once again. The latest effort by Denmark's Maersk tankers uses rotating cylinders nearly 100 feet tall that can function as high-tech sails. And these things aren't expensive. They're only like $1 million. And they don't rip. They're saying they could save as much as 10% on fuel. You start putting the wind farms, the solar panels, biofuels, on and on. The trends that we write about on alternative energies in the Trends Journal, there's too much product of oil, gas, coal, and not enough demand, and it's eating away from other ends. And so when we're looking again, going back to begin with, the major story today is they rose interest rates 25 basis points. Everyone was waiting for this. So those are the facts, and you buy the facts. You sell the rumors. And the facts are this was not an aggressive statement by the Fed to raise rates strongly. So they expect to raise them 2 more times this year. And one of the reasons why they're not raising them is because, as I mentioned, if they raise them too much, you have all these foreign currencies that countries that borrowed their money in dollars. So if the dollar gets too strong, their currencies go down and they have to pay it back in dollars. So they need more of their cheap currencies to pay back what they borrowed. So if the dollar gets too strong, they're going to have a tough time paying it back. So now we look at the global economy, and guess what? Chinese data flash warning. Now remember, the yuan now is at a 6-year low against the dollar. They're killing deals, the Chinese, to stop the yuan outflows. So when Trump says they're devaluing their currency purposely, that's not true according to the facts. And you read this story, industrial production investment improved, but retail sales growth fell sharply. And it's not only the retail sales that are falling sharply, so too are home sales, so too are auto sales. Yes, the home sales are still up strongly, but not where they used to be. So it's a global situation. Going back to the interest rates, that is one of the great fears that the Fed has. If they raise rates too much, All of those currencies and those emerging market currencies where they borrowed all that cheap money when dollars were cheap, they have to pay them back in dollars. The dollar gets too strong, they're in trouble. They need more of their cheap money to pay it back. And talking about having trouble paying it back, you send your kid to college, get that degree in worthlessness? Yeah. And what are they? $60, $80, $100,000 in debt? Don't worry about it. It's getting worse. Student loans defaults increase. More than 3,000 people a day defaulted on their federal student loans in 2016. As of December 31st, 8 million people owing $137 billion were in default. Don't worry about it. We'll pay it back because the government does these dirty deals with their buddies, their banksters that loan this money out, and we, the little people, are obligated to pay it back, just like that Fannie and Freddie. That's right. The banks lower the credit scores that people could get loans from. They default on them, and we have to pay it back because them cats are too big to fail. They don't like to lose money. Oh, when talking about not losing money and the cats that we have to bail out, yeah, how about that Trump draining the swamp? Another Goldman executive joins administration. That's right, the Goldman Sachs gang, the Merrill Lynch mob, yeah, the J.P. Morgan Chase criminals, one after another. This is the game. But they don't write that in these stories when they talk about students defaulting on loans. Oh, and now just to be fair about it, they can't get out of this debt. Maybe when they die they will. And you know who you could thank for that? That's right, Biden and Clinton. They changed the laws of people defaulting on loans. It began under the end of the Clinton administration, and then they pushed it through during the Bush administration. So these students are screwed, and so are we. We have to pay those loans. And on to some other news, talking about getting shafted again. Here we go. H-1B visas keep down U.S. tech wages, study shows. Old news, history before it happens. You read it in the Trends 2000 book that I wrote 20 years ago that this was happening and was going to get worse. And if you want to stay on top of the trends and ahead of the news, as we keep doing and showing you every night in our Trends Journal, in Trend Alerts, in all our writings, history before it happens, you're going to want to be in Ireland in June. Find your future in trends in magnificent Galway, Ireland. It's a magical setting. And we're going to engage, learn, play, and reflect. And you know the playing, you got to boogie before the lights go out. So we'll be talking about trends and how to become an on-trendpreneur as well. How to take advantage of these opportunities that the bigs are leaving behind and the others don't see. It'll be a real week of history before it happens. Go to our trendsconferences.com for information about the conference, the setting, the hotel, how to register. It's June 10th to 16th. And then on to some other news. They had that election over there in the Netherlands, and Geert Wilders didn't do well. Nope. So the populist movement took a step backwards. But he was more anti-Islamist, and I think that turned off a lot of the people. The ruling party won. He only got 19 seats. The other party got about 31 seats, but over 80% of the people turned out to vote. Could you imagine? Over 80%. Yeah. We're lucky to get near 50 over here in the States at a general election. This is a big story. We're going to be writing about more of it in the Trends Journal, and we're going to be speaking a lot about it in Galway, Ireland. Google and Facebook build digital ad duopoly. Google and Facebook will extend their dominance of the digital advertising market this year to control 60% of the growing market. U.S. digital ad spending will grow 16% to $83 billion. The money going to Google and Facebook and their online advertising is going to go beyond TV. Hey, just like did you see that bottled water now is selling more than regular soda? Just like we forecast that one long time ago. The same thing here, but there's a big if with this whole story. And the if is, are these digital advertisements working? What kind of return on investment are advertisers getting? Are the people watching them? Where should you put your money in advertising? Tune into the next Trends Journal or meet me in Ireland and you'll find out more. This is Gerald Celente, and that's some of today's Trends in the News.